Welcome back to Chart Post-Mortem. Today, we are dissecting a high-voltage sequence on the EUR/USD 5-minute chart. This is a masterclass in reading candle-by-candle psychology. Let's break down these 6 candles. Candle number 1 starts with a bullish attempt, but look at that rejection. The sellers immediately stepped in, leaving a long upper shadow. This was the first hint that the trend was shifting. Candle number 2 confirmed this bias. It's a solid bearish engulfing candle, showing us that the sellers have officially taken control of the narrative. Then we see candle number 3, a classic doji with long wicks on both sides. This represents a massive battle between buyers and sellers. The market is indecisive here, but the fact that it couldn't push back up tells us the bearish pressure is still mounting. Candle number 4 is where the momentum explodes. This large bearish impulse candle is designed to create FOMO. It breaks through psychological levels, making retail traders believe the market will crash forever. Candle number 5 continues that move. The O4 summoned the Tanati for stay, but notice the wick at the bottom. This is the first sign of seller exhaustion. The downward drive is losing steam as it hits a major liquidity zone. Finally, look at candle number 6, the green reversal. Why did this happen? After 5 candles of bearish dominance, the sellers finally ran out of fuel. The institutions trapped everyone who sold at the bottom of candle 4 and 5. This green candle is the snapback. It's the smart money stepping in to buy the discount created by the retail panic. In trading, the most obvious move is often the trap. Candle number 6 isn't a miracle. It's a mechanical reaction to extreme exhaustion and liquidity hunting. Stop following the crowd. Start reading the footprints. This is Chart Post-Mortem.